This is the briefing for Wednesday, June 17th. Well, we had an exciting afternoon. The Fed announced their decision on interest rates at 2 p.m. Eastern Time. And then we had the press conference with our new Fed chairman, Kevin Warsh. So basically, I guess the markets didn't really care for what was being said. There was some volatility, as you can see right through here. This is the spiders on an hourly basis, Qs on an hourly basis, and IWM on an hourly basis. So you can see we got a little bit of volatility here, and then all of a sudden during the press conference, things started to get a little bit worse. What's important here today is that from a short-term perspective, we traded through 745 on the spiders. We traded through the 723 area on the Qs, and we traded through the 290 area on the IWM. You can see volume increased pretty significantly. The key here, though, is what's happening with breadth. You can see breadth even yesterday, excuse me, even yesterday started to fall off, suggesting that there was some weakness coming into the market. And then during the day today, prior to the Fed announcement, you can see it continued to fall off even more. Really, what's very significant is what happened with net volume. You can see volume was up. This is volume in the spiders, but this is net volume, and I'm going to in the NYSE, and I'm going to get to that in just a few minutes when I get to the volume chart. But you can see that right now, from a short-term perspective, the spiders are open up to trade down to 725. Now, that doesn't mean that they will, but it does suggest that that's the next level of at least short-term support. You can see the Qs kind of held right at the 722, 723 area, and then of course started to trade through it. Some buyers came in right at the close. Volume increasing also in the Qs, breadth falling off as well as net volume. And the same thing with the Russell trading right to the 290 area and then kind of pausing before going into the close for today. Important to this is going to be what happens in tomorrow's trading. Now, tomorrow is Thursday, and Friday the markets are closed. So we've got a long weekend. It's going to be interesting to see how traders want to go home for a long weekend, whether they want to be long or whether they're going to be short. Now, I want to point out one thing here, that this is close to a double top, but a double top is not a double top until it breaks a significant support area. So we'll see if that really plays out, but I just wanted to point that out. The other thing is that if this was the beginning of a counter trend rotation to this part of the rally, and then we looked at this once as a three-step counter trend move, and I think we came in pretty close to projecting equality between legs 1 and 3, right to where it came to. But this could be developing into a more complex counter trend rotation where this is a leg 1, this is a leg 2, and leg 3. Now, if that's the case, I didn't run the numbers, but if that's the case, leg 3, if there is equality going to happen, would come in pretty close to the low of this third leg here, which on that day comes in right around the 722.59 area. So I would expect that would get taken out slightly before we see potentially some type of a pretty substantial rally that could occur. But that's yet to be seen, so I'm getting a little bit ahead of myself. So watch this area right around the 728 area if we happen to get that far in the spiders. You can see volume increasing in the spiders, 52-week highs minus 52-week lows falling off, and breadth just absolutely collapsed. And now this is not at an extreme where breadth could go, but it certainly was a pretty good fall off in today's trading. And if we do see lower prices tomorrow, then we need to see breadth, assuming you're short this market, we need to see breadth declining as well to continue with the trend. In terms of the Qs, you can see a little bit different. There's definitely a double top right here. We'll see if that really plays out or not. Next level of support coming in on a longer term comes right around the 694 area. And then below that, we're looking about the 686 area. See volume ticking up slightly in the Qs. And then, of course, NASDAQ breadth falling off as well as net volume. In the Russell, it was interesting. The Russell was showing a little more strength than the other two indices today. Trading below this 293 area, you can see there's not a double top here, so that's a very interesting concept. Next level of support is going to come in right around the 277 area in the IWM. Bread falling off, net volume falling off as well. Now, I want to get to the overbought, oversold condition. You can see that while we had some damage done in terms of price development, you can see that we are basically neutral in the NYSE and in the NASDAQ. So this gives the market the opportunity to trade in either direction should it decide to do that. And now the final chart. Well, I guess not the final chart, but this is the most important one that I'm looking at right now. You can see this is NYSE volume. So you can see volume is beginning to tick up on the move to the downside, but look at net volume. Net volume absolutely collapsed, just a huge negative net volume number. Same thing with the NASDAQ. Look at the negative net volume number there. Volume increasing, but most of that was selling volume. So it's going to be important for if we're going to see a continuation of selling tomorrow for the internals to continue their decline as we saw in today's trading. Nothing got to an extreme today. So it does not suggest that we're at an extreme oversold condition at all. What it tells us is that the market is neutral in terms of being overbought and oversold, and that we can go in either direction. Looking at the percentage of stocks above their 20 and 50-day moving averages, you can see we got some damage being done there. That's in the S&P 500. In the NASDAQ, you can see the same thing happening with the 50-day moving average, and the same thing with the Russell. So you can see that we've got a pretty good decline in the percentage of stocks in those indices above the the 20 and 50-day moving averages. Looking at where where resistance is, 745 in the spiders tomorrow. If we trade through 745, and that's going to suggest potentially that we're going to be testing up somewhere up around the 751, 752 area. The Qs are right at resistance. If we trade through that, I would suggest that potentially 730 might be a little bit of a stopping point. That would be the lower extreme of this area of rotation. It was for about a day and a half. And in the IWM, we're looking at 290 as being resistance as well. So Spider's a little bit ahead of the other two indices to the downside, and the Qs and the Russell IWM are really right at support and or resistance. So it's going to be interesting to see how we open tomorrow and how we close. So I think potentially for the longer term development of the market, how we open for tomorrow is going to be in the first hour is going to be important, and how we close in the last hour of trading is going to be just as important. Have a great night, and I'll pick this back up tomorrow.